Hi everyone, it's Sunday, May 19th, time for another HideNet Week in Review. I'm Vera Dordick. The Hyde market continued its negative run this week with pessimism still affecting most of the market. The situation of plentiful supplies and poor demand is still driving prices down and volumes are generally poor. Starting with the United States, most selections saw prices decline again this week. The trade war escalation has not been a major factor for Hyde, so far that is. On Monday, May 13th, China announced retaliatory tariffs on the U.S., ranging from 5 to 25% on $60 billion, in U.S. imports starting on June 1st. Most U.S. hides and skin exports remain at the current 5% retaliatory tariff, but there are also some products on which a 25% tariff would be levied. Also on Monday, the U.S. proposed new 25% tariffs on $300 billion in Chinese imports to the U.S., pretty much proposing tariffs on all remaining imported goods from China. Leather goods, footwear, and other relevant items are included on the proposed tariff list. The government has scheduled a meeting and a comment period for June, so as usual, we'll have to wait and see if those are instituted. With regard to steers, heavy Texas steers dropped again this week and traded at $21 to $22 on 62-64 pound averages. Other steer selections also saw more declines, some more dramatic than others. And once again, in the cow sector, little trading was reported with bids continuing to be few and far between. U.S. slaughter for the week was again high at 660,000. For export sales, the week's report was back down under slaughter again, and more significantly, shipments were not very impressive. As many like to say, a hide sold is not a hide shipped, especially in today's environment of renegotiations and resales. In our market observations this week, we look at the factors in the current market that make this downturn different from any other. From Brazil, editor Ronald Guiel reports that fresh hide prices dropped again this week, and he notes that they've declined 20% in recent months. TR1 is down also, with sales reported at a maximum of 55 cents per square foot. The situation in Brazil remains much the same as in the U.S., and there some suppliers are sending the lowest end hides to gelatin production already. From elsewhere in Latin America, we have news about Mexico and its footwear imports, as well as efforts to increase the internationalization of Guanajuato's industry. From Uruguay, we have news about another major drop in their leather exports that happened in April. Turning to Europe, Andrea Guolo says that it was another week of stability for cow prices thanks to a slight uptick in footwear. For bulls, sales picked up a bit this week and most were steady, but a couple of northern origins lost a little more ground. In the lamb and sheep market, the chasm between the high end and the low end is now quite apparent, just as it has been in other parts of the hide industry for a while now. In his analysis this week, Andrea takes a more confident tone because there were more sales last week, especially for bulls where supply is tighter, unlike the cow sector. He also takes a closer look at the footwear situation and how it connects to fashion and the timing of orders. So that's all we have for today, and until next week, good night from HideNet.